Back to another quick update. I'll just keep this update very short and I'll come back with the detailed update next week. So, a lot of things have changed in the last 14 odd days in the market, and market has strengthened so much. Yes, you're not seeing that typical 1,000, 2,000, 3,000 point rally in a index like something Nifty or mid cap and those kind of pockets. But what has actually happened in the market is that the beaten down pockets in the market have started showing a lot of recovery. And this is a sign of breadth, broadening, and strengthening in the market. Don't for once think because your PF is not moving, the market is not strong. What was happening till now was that there were a handful of pockets in the market like defense, capital market, some bit of metals. Recently, banks had started doing well, power, new age IPO stocks, mid cap select stocks. Those were the pockets that were doing well since the month of March. And now you've suddenly started seeing broadening happening in the broader market space. I'll quickly take you through some charts just to show you what is happening. There are two kind of structures you will see. One, this is a custom insurance index because we don't have an insurance index yet. Of course, it will come out. So this is a custom insurance index. The structures that you'll see is in some index, you'll find this relative strength line against Nifty sloping on the lower side. This is against Nifty 500. And in some index, you'll find that after this line has been down for a while, now you're seeing some bit of recovery. And then, of course, you have sectors like defense and capital market where relative strength is beautiful. So I'll just take you through some charts. There are some 60 odd charts here. So this kind of structure, you have to wait for things to materialize still because it is still below 30-week moving average. Again, for those of you who know the teachings of Stan Weinstein, relative strength is not that great. I'll quickly flip through some charts. Look at this structure. This is a hospital index. So probably this structure, the hotel structure, this point is what was going on in hospital sector in this pocket. That is why you have to look for sectors that can do well ahead, not that have already done well and there's a lot of consensus in it. Hospital, healthcare, pharma, this has been a big theme. This is the rare earth index. Again, this is a customized one. Nice bit of trend. Again, coming back to the rising 30 weekly moving average. Beautiful relative strength. It has consolidated what I think 7 8% from high, about 14 15 12% from highs. Excellent consolidation has happened. Then you look at two-wheeler space. This is just the two-wheeler index. So you don't have a separate two-wheeler index. I've made a separate two-wheeler index. This is easily doable. The formula is here. So this is consolidating beautifully at 30 weekly moving average. Good relative strength. In contrast, look at the four-wheeler auto space. It's trying to find its feet. Still in this particular demand zone. The chart is not backdated because of Hyundai. Hyundai recently listed. Bank Nifty, again, this is one index that I'm telling you is going to surprise a lot of people. It's still not in a smooth trend kind of structure, mainly because of a couple of private sector banks. But otherwise, in the last week's video or the update that I did previously, I was telling you that once banks start getting into a decent structure, it will start lifting autos, realty, consumption, everything will start moving up. And even in my last video, my remark that I made was the market has started to broaden out just because of banks. And you just wait and see. The only caveat I will give you is global market. I don't know what is happening in the global market. Global market structure is fine, but if we fall gradually in global market, India will be fine. But if we fall rapidly, then no market will escape it. Apart from that, there is no data point that tells me that Indian market is not going to do well. So Bank Nifty, again, it's my favorite sector. Auto just at 30 weekly moving average. Auto is a bit distorted because of what four-wheeler is doing. The pocket you have to be in is two-wheeler. Again, nothing I speak is a recommendation or trading advice. It is your money, your responsibility. Please consult a investment advisor for it. In the two-wheeler space also, the thing that is doing well is EV segment. Handful of players are there. Commodities, again, like metals, it is pulling back. Consumption is making a comeback, especially new age consumption. I'll just quickly show that chart because we are on the topic of consumption. Look at this. This is a beautiful structure. RS improvement is now sustaining above 30 weekly moving average, two back-to-back WRCs. This is a beautiful structure. If some of you believe in the teachings of Tom DeMark in trend line, this is a beautiful breakout that has happened. So this pocket will surprise, and it is also a message from the market that a lot of domestic players have now started setting up. I'll come to a couple of sectors later on also. Energy, very similar to the CPSE structure. CPSE now over time is I think again going to set up. It has just pulled back a bit deep, but this is a beautiful structure. Beautiful VCP contraction at 30 weekly moving average. Look at the RS. This is nothing but consolidation happening. Finance very similar to bank, but in finance also I was looking at a particular index, housing finance. I think that is setting up beautifully. FMCG, a lot of buzz was there, but I don't see meaningful recovery and improvement still in this sector. I think we'll give it more time. More specifically, I would want it to move above this particular region. It's always better to buy something, when the trend is clear. Infra, beautiful consolidation at 30 weekly moving average. IT, again, a lot of buzz last week, but I'll still tell you the structure of IT from medium term is also not great. The only remark I had made on IT, I think, was here. I think here, this candle, that how lower it can go, nobody knows. But valuation wise, it is getting in that zone. So it is only for those people who buy ETFs or long term stocks and can hold it for 10 odd years or 5 6 years and wait for that cycle to play out. Apart from that, this is no structure at all. And this is one of the reasons why Nifty in general will remain in a range. Only sector specific, pocket specific movement will happen. I'll also take you to this chart that I keep updating. Remember, we are not in a stage 2 structure yet. A stage 2 structure is when market trends smoothly. And while people can find n number of reasons why India is not doing well and this and that, I don't want to get into those discussions again. I've already addressed those points with data, not with narrative. But this is nothing but a stage 2 consolidation that is happening, that Indian market is going through, digesting, sorry, the gains that we have seen post COVID. So what this tells you is that the market in general is in a range, but only theme specific movements are happening. So don't expect some massive movement in headline indices, but definitely expect a lot of movement in individual sectors and pockets. So media, I don't track media that closely, but this is nothing kind of a structure. I would never touch such structures. Metal is beautifully retracing back. This is one strong stage 2 structure. You never know. Metal can be again in a similar position where it was here, where it was at this point. So believe the trend. Mid cap pocket again at lifetime high. There is a reason. This is a beautiful RS consolidation and a breakout. This pocket has to be looked at. Mid caps, mids, micro cap, NSE has defined indices for you. It is so easy now to track the structure of these. Along with market regulators, SEBI, you now have ETFs. If some of you don't know how to pick stocks, if you don't know, you have limited capital and you don't want to over diversify, you just want to go behind one particular pocket. Let's say you like small cap 50 or small cap 100 or momentum small cap 100. You have ETF for all of these now. All you have to do is buy those ETFs. That is in case you don't understand which stocks to go behind. I'll skip opening up charts of mid cap and micro cap because we have discussed this many times. I just want to focus on sectors now. Look at pharma. This is a beautiful structure. Look at this tight contraction moving up. Such structures are nothing but you should look at them when they're doing this. Some strong sectors of last 3 months are actually doing what pharma was doing here. I just opened a couple of charts also. PSU bank is undergoing some consolidation, mainly digesting the gains. Now private sector banks have much better charts. Now since I am on the banking topic, let me open up the chart of private bank also. So look at this private sector bank, beautiful back to back two WRC candles above 30 weekly moving average, good improvement in relative strength. It has some supply, mainly couple of private sector banks are not doing well, but I think time for banks is here. Then realty, this is again when bank starts doing well, auto consumption, realty, everything starts moving. This is not a coincidence. Tom DeMark students, this is a beautiful trend line breach, improvement in relative strength. Now, I don't know whether we are going to have a V shape kind of a takeoff because the earning season is about to start next week. And usually in earning seasons, index generally does not move that much. So you can have 4 5 weeks of consolidation and then I think a continuation. But this index looks very good. Service sector, small cap, I'll skip. CPSE again has retraced back to this breakout zone. This was one of the sectors I was really bullish on, but in the short term, this has not worked out. The structure is still good. I would have retained my large exposure here had couple of sectors not set up, but I have this sector on my radar because again the structure is beautiful. So this is ETF. I don't know why ETF is here. So broadly Nifty, yes, it is a range. This relative strength is against Nifty, not Nifty 500. So capital market again, what a beautiful structure this is. And capital market, I've got tired of saying this even when price was correcting in all these pockets. My message was very simple. This is a very different kind of a sector. You should not be judging it based on posts you read on social media. This is a new sector that NSE has introduced. Cement, not much chart here. Chemical, again, this is a good structure, also beautiful relative strength. Ever since that index came into existence, it is now at lifetime high. Again, data is limited, but you're seeing a lot of buzz in chemical stocks also. Core housing, if real estate is going to do well, core housing also, this is very closely tied to real estate. The same structure and pattern you're seeing, beautiful. This could be the realty, and core housing sector could be one of the sectors you need to watch out for in the next quarter, next couple of quarters, along with banks. EV again has been very close to lifetime high. Beautiful improvement in relative strength. See, it's not that hard. You don't need a lot of softwares, a lot of let me tell you, AI insights to know what is happening in the market. All you have to do is replicate this chart, look at where the ratio is rising, and see the time frame. It is weekly. I'm not looking for daily or hourly, and that is all not required. Once a week, majority of you are doing a job. Once a week, you need to go through which sectors are having beautiful rising relative strength against Nifty or Nifty 500, whichever benchmark you choose. Ideally, you should choose Nifty 500. I don't know why the Nifty 50 line is there, but there's not much of a difference. I'll just flip it and show it to you. If I just put Nifty 500 here, the difference won't be that much. So difference is not that much. You still get that rising ratio. Then financial services X bank, again, look at it. This is nothing but outperformance in the market. You have to be in such pockets. FPI 150. This is an index. Read about it. Niftyindices.com. Again, based on float, where FII is likely, might invest, because FIIs generally don't go into the micro cap, small cap, mainly because of float, liquidity, those kind of things. So this is still in a lower low structure, and that is you can see this in the FII data also. FII selling has reduced a lot. That is something that you have to take note of, and that is also one of the reasons why banks have started bottoming out or doing well. Healthcare, what a beautiful chart this is. Again, this is a multi-month kind of structure, not 10-15 day kind of a structure. So imagine you saw this structure here. Okay, imagine you saw this structure here, you really liked it. The trend played out over next many months. Okay, so understand, this is what is happening here. This kind of structure, it plays out over many months. In between, you will get plenty of drawdowns, 5, 7, 8% corrections. Whether you want to do something in those or not, that is completely your choice, but that is how you need to look at it. High beta index, Nifty high beta 50 index. Again, this index is telling you something. This index is telling you that there is buying happening in the market. Things are fine. It is just that our PFs are slow for two reasons. One, we are comparing what is happening to our PF with respect to the PFs abroad. Okay, courtesy of some of these chaps who have made money online selling a lot of things, and then they keep posting about, if you held this stock, it would have become this, it would have doubled your money, tripled your money, those kind of things. Okay, the second is that we need genuine participation by institutional investors also, because that is when typically you see momentum returning in the market. And I've already explained why that thing is not going to happen so soon. Indian market is stuck in a limbo, if this is a word, I don't know. The thing is that Indian market economy is fine, index structures are fine, momentum is not there. So you're seeing price attempting to move up, but it again comes down because there is only so much that domestic money can do. So we need institutional buying. Something has to break abroad, gradually break, not suddenly. If it breaks suddenly, we are going to face the brunt of it. Gradually, if it breaks, then you can see some fund flow coming back. Even if FIIs, on Friday, I was seeing FII buy figure was 1,300 crores. Fantastic. We need more days, because that gives you confidence in the market. You'll then start seeing high beta pocket, banks, real estate, metals, capital market, defense, again, all these sectors again starting to move up. And you need that kind of feel good feeling in the market. As of now, you don't get that feel good feeling because, again, you read a lot of short term commentary, and also addiction to gift nifty is something that dampens the mood of a lot of people. And gift nifty is the most useless indicator you have in the market. Don't look at it. 3:30 the market closes, next day prepare for what is going to happen in the morning, and do your homework. Don't track gift nifty. Unfollow everybody who speaks about gift nifty or writes about gift nifty, because it indirectly damages you a lot. It puts you in that short term mindset. Short term, you lose money. Medium to long term, odds are in your favor to make money. So this is housing index, this is India manufacturing index. Again, look at all these index very close to all time high. Beautiful relative strength. Defense, again, How many times defense we've spoken about? Digital index, it saw some movement this week, but again, this structure is not great. This is the tourism index. Again, very similar to real estate. This index in the last few days has also started seeing some momentum. When I compare the two, I will still tell you real estate has a better structure, because sometimes what happens in these structures is that relative strength moves up, then again falls down, and this index goes into consolidation. So I'm not yet convinced about this. I'll check in a couple of months' time, couple of weeks' time. This is infrastructure and logistics, all-time high. The data is less, obviously, but look at this. IPO index, again, new age companies. This is a proper move in IPO index. It's not that difficult, guys. I'll just explain how. Whatever you're seeing here, you need to replicate that in stocks. So go to niftyindices.com, select this IPO index, go to the constituents list, see the list of stocks. I think there are some 100 odd stocks, 104. From those stocks, look at those stocks that have similar kind of rising relative strength, above 30 weekly moving average, good candles, clean structure. That's all. That is all there is to what Stan Weinstein has taught. That is for less than $1,400. So microcap, again, I won't repeat. Let's see if there is some other sector left. So this is India consumption index. The new age consumption makes more sense. IT telecom, not a great structure. This structure is fine. This is multi-cap. Of course, 500 odd stocks. I think nobody can track so many stocks. This is non-cyclical consumer index. Not great relative strength, good candle though. I'll skip it. Oil and gas, I'll skip it. Railway PSU, not a good relative strength structure. Rural, for economy, it's good we have a Nifty rural index now. Keep tracking this index. There is no structure yet, but I think whenever the fillip returns in the economy, currently the economy is fine, but we are not having some great momentum kind of stuff going on in economy. That is again reflected in the market. So this index probably can be a proxy to that. Then you have transport and logistics. This is a decent structure. We're having some breakout here, similar to tourism, but as opposed to tourism, this particular index has a good structure. And let me just open up the chart of S&P 500, still outperforming Nifty. Just a recent bit of underperformance, but this index remains very strong. And I think same is the case with Nasdaq, and that is what is dampening the spirits here, because money flow is not here that much. But on a weekly basis, you've seen so many index now have relative strength which is closer to 52-week high, and that is a sign that things are happening in a market. It is just that momentum is not there. The thing with momentum, always remember, is that first comes structure. What is structure? Structure is rising trend, higher high, higher low, relative strength outperformance, and those kind of things. Then comes breadth, and then comes momentum. So if I have to map out what has happened in the market since Jan, and when we were going through a corrective phase in Jan to March, in March structural improvement started happening. Now the really strong sectors that were there between March and May have not done that well in June, July, because those sectors that were beaten down, that is the breadth, has started improving. What is spending is momentum. You know why they say spending time spent in stock market is more important? Because majority of people in stock market who are short term minded will come in once the momentum has played out. Then they get frustrated in the structure phase and the breadth phase. Unless you live through structure, unless you see improvement in breadth, you will not be able to participate in momentum. Those who are reaping benefits in the US Nasdaq story have gone through that painful cycle of structure, breadth improvement. Now they are seeing crazy momentum and breadth is failing. That is what is happening. Sometimes, only sometimes, rarely I've seen after structure directly momentum comes, and that momentum lifts the breadth. That is also sometimes it happens. I think in the current context, we are in this order. Structure has improved. Now breadth is improving. In this breadth improvement, we should not get a negative global kind of news. That would be really sad. I think the momentum phase is pending. A word or two on quarterly results. No matter which quarterly results you go through, if some of you are new to stock market, next 10 years you'll go through many quarterly results. Rarely, I mean rarely, you will see bullish commentary during quarterly results by analysts, anchors, and experts, because negativity and negative news flow and negative results garner so much of attention. So you have to do your homework. Screener.in is a fantastic resource. Screen which companies are growing more than 25% profit growth, ROE, ROC greater than 13-14%. That's all you need. You measure earnings through your lens, not through the lens of any software or analyst commentary. Don't expect anything amazing. 2 weeks back it was that the crude impact will be seen in this quarter. Results are not going to be good. Now that the market has rallied, the reasoning is that they had a lot of stockpiles somewhere and they've used that, and now next quarter might get impacted. You will always see something concerning that is being blown out of proportion. What happened to the war thing? It materialized, yes, and had you been out of the market, you wouldn't have seen so many sectors doing well. Then the concern 2 weeks back was, oh my god, no water, monsoon, nothing is happening in India, deficit is going to be more than 80%. What is happening in the last 2 weeks is unprecedented in certain states when it comes to monsoon. The entire 15-20 day water coming in 2-3 days. All these things materialize over time. Stock market equals uncertainty. Stock market does not equal guarantee. If you understand this, you will understand why news flow is like that. All right. Whatever concerns are there in the economy, globally, monsoon wise, anything, all gets normalized over time. Impact obviously is felt at human level, but that is not what we are discussing in this video. It is all about market. So market takes care of all negative news flow, it digests it, forms a range, structures improve, breadth improve, and then momentum comes in, and then all the naysayers will come in here. Don't do that mistake. All right, so I'll see you next week. Have a great weekend ahead. Bye.